Okay, everybody, this is Brandon from Galaxydoc Market. Welcome all the community members. And for those of you watching a little bit later on x.com and YouTube, today is January 24th, 2026. It's Saturday. It's about 6:19 a.m. as I bring you this video Eastern Time. And we have a lot to talk about. And for those of you who have stayed faithful to the new gold and silver regime, congratulations. We've been talking about gold and silver for too long, okay? But it is becoming even more important to understand where we are with gold and especially silver, which is warning that there is a major crisis ahead geopolitically, probably, in the banking sector, and also in our stock market, which is very, very toppy and it's showing signs of wobbling. And so, without further ado, let's go right ahead. And we're going to be talking a lot about this topic as well as looking at the charts as it relates to gold, silver, and the stock market and Japan. We need to look at Japan, and I think Japan is literally where all the things are happening, but we're just being distracted to pay attention to other things, which we will talk about. Okay, here's the disclaimer. Pause it, read it. If you agree, especially if you're not in my community, move forward. And of course, thank you so much for following me at x.com/Galaxydoc Market, where we post my pertinent thoughts in real time that you may not get in the x.com video or in the YouTube videos. And of course, our members are going to be getting any type of updates in real time. Okay, and please like and subscribe on YouTube. Thank you. All right, so we're going to start with this right now, and this is super important because it's a letter, obviously you can see here, from January 18, 2026. Okay. So this is a letter dated on the 18th of January from the CEO of APMEX, which is the largest precious metals dealer maybe in the world, but at least in the United States. And this is what I want to help you understand, that this is not a derivative problem. This is not a COMEX or, the Silver Slam Crew issue. This is now a battle for very, very minimally existing supply issue. Okay. He's basically talking about last Saturday was the fourth highest week in their history of existence and 40% higher in sales volume than the weeks prior, which means that the demand on the retail side and also in the industrial, who knows who's buying these, okay, at these exorbitant prices, are going higher. Okay, now this is what you need to really understand. Demand for silver as percentage of their revenue hit an all-time high last week. That is because the prices are exploding. Okay, so the other thing is that they instituted a $10,000 minimum to kind of slow down the diminishing supplies on their end, and they've seen a 20% drop in ticket sales, right? Number of sales occurring, but the dollars amount is still rising. Even with a 20% drop in sales, purchasing ticket orders are in their top 5 in their history. What is this telling you? It's telling you that people are beginning to wake up. The industries and banks, they're basically competing amongst everybody else. Pretty soon, when the mass is awake, the Johnny-come-latelys, right? The retail bag holders wake up, and they have not woken up yet. They don't know that this is going on right now. Okay, but Ken Lewis, no relation to, I think, Bank of America CEO, right? Is basically warning that the supply is the driver of this rally and that it is not. We are nowhere near topping at this point. Now, effective today, they're instituting a minimum of $500 for online orders in addition to this $10,000 minimum to further curtail the demand for these precious metals. In the end, COMEX could basically lie about and manipulate with paper, but the demand, the physical demand, is going to be driving prices. Okay, so it's very important that you understand that we understand what he's saying in summary, that he's expecting demand to increase for at least 1 to 2 more months. Okay, and yet COMEX has been trying to suppress prices, and at this point, that these type of communications are coming out is an indication that some of the banks, or majority of the banks, may have covered sufficient short positions and now they are levered long. And you know what banks do when they're sufficiently positioned? They're going to let this thing rip. Okay. Now we all know, of course, on Friday that we finished above $100, which was, I think, a very, very important inflection point as we move higher. I always felt like once we close above 100, we're going to start seeing the parabolic moves, and everybody thinks it's already a parabola. It's not a parabola. This has been a very controlled and consistent grinding higher move, even though when you look at it, it looks like it's basically a blow off top and things like that. We have just yet begun to have a blow off top. This move is just getting started, despite what many of the experts, quote unquote, are saying. This move has legs, and we will talk about that in the chart form. But this is super important for us to understand what is going on. All right, so let's move forward. Now, this is the other example. This is, as of this morning, I pulled it up. And this is the United States 1 ounce silver eagles and 1 ounce gold eagles. Okay, and I'm going to show you something very, very important. Okay, so if you're riding by check or wire, it's 117.90, and if you buy more, it goes all the way down to 115.90 as the premiums are exploding. But if you pay through credit cards and things like that, you're going to pay a lot more. Here's the funny thing is that I want you to understand which is more precious. Okay, the 1 ounce silver gold eagles, okay, there's no supply issue. So this gold moving on its own without supply issue like the silver is an indication that gold is a safe haven asset. So it's silver, but gold is more so. And gold started to break out this week again. And yet they're having it on sale. It's like $50 sale. Well, gold hasn't broken 5,000 yet. It's at 51.49.19, and they try to tell you that this is a sale because they have a lot more of these in stock than silver. They're trying to divert demand away from silver into gold, but you know who's going to really afford this 51.49.19 gold? You know, when last year we could have bought these for $2,400, right? So the issue is that they're trying to everything they can to turn the attention away from the scarcity of silver. Silver is the most scarce and most manipulated commodity known to mankind. Okay, so look at these premiums. Okay, we're going much higher, folks. I don't care what other people say. This is going much higher, and I've been steadfast in calling my price targets. A lot of you thought I was crazy when I called for $72 silver into the year-end close. You guys thought I was crazy when I was calling for $92 to $100, 105 level. And you guys are still going to think I'm crazy. Here I am. I'm calling it. I believe that we're going to hit 105 to 117 before Wednesday, before Tuesday, which is really the futures options expiration date for silver, which is January 27th. Okay, we're setting up for major fireworks, folks. And those of you who are trading this, or more, even better, is to accumulate and stack these physical silver and gold. It's still not too late if you could find them to continue stack these. It's all about ounces, not really the dollars. And when the fractional reserve banking system, which is basically complete fraud, printing money out of thin air and issuing debt, enslaving you under that system, when the mass is awake, you're going to see silver, oh my goodness, People are having $400 to $500 price targets. I think we really take out at least 200 to 250 by March. I believe by end of the year this year, we will be flirting around with $900 to $1,000 silver, and gold is probably going to be flirting with by the end of the year 10 to 12, maybe $15,000. I will give updates on my video as we go. So the question you want to ask is, why is gold on sale but not silver, which is more precious? More importantly, they are trying to divert demand away from silver, which is very, very scarce. Okay, you have a lot of gold, right? But gold this week breaking out is an indication that there's something wrong, either geopolitically, economically, domestically. Something is on the horizon. Gold is an early warning sign. Silver exploding means that there is a major dislocation in our banking system, in our financial system, okay, and also demand for our industrial system, okay. Silver is the most precious metal in the world. All right, so this is on January 23rd. I've been telling you, watch Japan. Japan is intervening. They are intervening on their yen, okay, on the JPY intervention, which means that this is a US dollar to JPY peg. And as this US dollar JPY peg declines, that means that there is an active purchase now of Japan. For years, this was not the case. Japan played a good citizen role in the world and went into negative interest rates and just issued bond. They are the most indebted nation next to America, I believe. Okay, and now they're saying enough is enough, and they're going to do intervention. How are they intervening? They're going to be intervening because they are the largest holder of U.S. 10-year treasuries. They're going to be dumping that in the open market, and we'll be showing you the charts on that. And as a result, you're going to see the dollar plummeting as JPY is being supported. Okay, this is possibly the black swan that's ahead, and it has begun right here. I said it right here. Okay, this intervention means that no longer is Japan going to play the good citizen of the world and take it up the butt by buying up useless American treasuries and basically be the beating boy of the world. Okay, it is protectionism, I said. And the U.S. is also undergoing what I call Chapter 11 bankruptcy in hyperinflating their debt out of the system into the stablecoin regime, which is the new monetary system that's happening as you're sleeping, as you are watching, getting prepared for the AFC and NFC championships, or watching whatever it is. As you get distracted, this is happening behind your back. Okay, pay attention, folks. Black swan ahead, and it has begun, and it's starting with Japan. In the coming weeks, we have the death of fractional reserve banking. It's just going to get wilder and wilder, and you're going to just see some crazy stuff. And if you saw the Davos meeting, oh my goodness gracious, these are the clowns that are running our world, folks. Okay, and I'm just going to leave it at that because I seem to be getting shadow banned or something on YouTube because I keep speaking my mind and the truth, and I guess truth is not something that I can speak over there. So U.S. Mint is signaling bullish all-in phase at this point. Remember, last week they basically hiked up the proof coins to 136 to 196, I believe. We know that Shanghai closed 112. I think Mumbai was at 119. India, Dubai, I believe, closed around 126 per ounce on silver. This is the death of the fractional reserve banking. And for those of you who still believe that the US dollar is somehow the world global trade reserve currency, no, we are not. We are fighting for our lives. We are becoming more protectionist. And Donald Trump, what better man to do this, with experience in claiming bankruptcies, are claiming a global sovereign bankruptcy, Chapter 11 style of United States. As we shore up our assets, we become more protectionist, and we clean up our balance sheet, and that's what's happening, and the globalist elites do not like that. Okay, so let me talk about what's going on in terms of our macroeconomic picture And then so I'll just bring this up really quick. Okay. And so one thing you need to understand is that it is a race to zero, and this is exactly by design. This is the US dollar, and you see it falling off the cliff, and we are now below this critical level. Below this level, weird things and bad things are going to start happening in the stock market. But you might say, hey, Brandon, you've been saying this for a while, that the market is topping. Yeah, but the market is topping. If you look at the underlying fundamentals and the divergences that are present, it is screaming volatility ahead, screaming correction is near. Okay. And you keep ignoring it, and the retail, bag holders are basically jumping up and down. And I've had somebody tell me, hey, you've been saying this for a while, but the stock market's at all-time highs. And I said, for now. And that is the function of continuous money printing. That excess liquidity has to go somewhere. It's not because the stock market is so healthy and that all these stocks, are, a great value. They're not. Okay. You're paying basically an excess premium for a stock that's worth $1, for example. We're paying a premium of $25 premium or higher. And did you know that most of the U.S. stock market right now is being propped up by zombie banks through the Fed repo discount windows? Okay, they're insolvent, folks. Their slam crew actions in the silver has made them insolvent, and they're also holding one of the most toxic assets in the world, which is the 10-year U.S. Treasury bond. Okay, and so when we're talking about the 10-year yield, which is basically Treasury bond yield, TNX, okay, and despite the 3 interest rate cuts, that shows you the impotence and really obsolescence of the Federal Reserve banking system and the death of the fractional reserve banking system, where you could print money out of thin air, okay, and issue debt. Okay, the debt-based economy is being replaced by asset-backed stablecoin digital currency regime that's coming as you are sleeping. I'm beating the drum here. Wake up, folks. All right. We've been going higher. Okay. So you might say, well, yeah, here's a little blip down. Okay. These are all rescue attempts, and it's not budging across here. I believe that we're going to start continuing to go higher, and that the inflation, whether Fed says it, whether Trump says it, whether your Congress or banks or whatever are saying that the inflation is being actively managed to be what does Fed say? 2% inflation target. That's the same thing as a 6 feet social distancing during the COVID era. Where did they come up with that? So closer to 6 feet, the virus somehow infects you. But if at 6 feet they don't touch you, think about it, folks. It's the same thing here. 2% inflation target. Where did they come up with that? They're not really telling you the truth about the real inflation, right? The real inflation is when you go to the grocery and then see that the milk since 2020 has basically hyperinflated by 300%, right? You get like 10 items at the grocery store, and then you're out $120. And that's what's happening, folks. Okay, enough of my rant. But this is serious, okay? With the dollar going down, okay, and the 10-year yield going higher is severely bearish. Let's look at the volatility index right here at the VIX. Okay, I've been telling our group and everybody right now at these levels, it's still not too late. It's about to break out. Volatility is about to spike. Okay, we've been basically building energy sideways in this channel, and once we break out about 20, okay, you're going to see 50, 60, 70, 80, $100 moves. Okay. And then let's look at our silver. Okay, I basically said if we get above this level, $100 to be exact, but really 100.355. All right, we're going to start seeing parabolic moves. And if you think that somehow the slam crew has any ammunition left, I mean, I wouldn't put it past them to like shut down the market and things like that. But COMEX is no longer driving the commodity prices. Gold or silver is not being driven by COMEX anymore. It's being driven by places like India, Shanghai, Dubai. They are setting it. Okay. And so there is a backwardation that's happening also, that our futures was lagging our spot price for the first time in United States for a while. The silver spot market closed above 100.3. Okay, this is why I had that inflection point. This was what the spot market was doing, and now futures market in backwardation has caught up. But they have a lot further to go since Shanghai has closed at 117, as well as Dubai basically trading at, I believe, like 126 per ounce on silver. And then, of course, when gold breaks up above 5,000, boy, there's going to be fireworks. This is setting up to go straight up. Okay, at this point. Okay, so that's kind of the things that we need to look at. And so that's the focus that we need to have. So let's look at some charts here. And then first and foremost, I'm going to be talking about silver and how I've been arriving at these price targets. Okay, so basically, we know that the Hunt brothers' famous 1980s cornering of the silver market, where they basically, within a month, took silver from like $8 all the way up to $49, right at these levels. And so we took that same minimum measure move, and I said that if we break out of this 45-year-old cup and a handle, this is a cup right here, right? You can see this cup, okay? And then this long handle. And so we broke out of this area, right? We broke out of this breakout area right into this area. Okay, and I said specifically that we will have the same type of initial move to break out as we break out of that handle and make that move. And so we did. We broke out, we pulled back a little bit, and this is a monthly chart, by the way. Okay, and we finished the month still above into the 80, like 72, and then beginning in January, January's not over yet, folks. Okay. We have this move. And so when you overlay the Fibonacci retracement, okay, so this is being from the ground zero and basically bouncing higher. And I basically put a initial move. Here's the 100% retracement. But I said that if you combine these two minimum measure moves because of the suppression that occurred, that we will likely see by the end of January, potentially, and maybe into February, okay, up to a maximum of like 148 to 150 level. We are in between, okay, 0.786 retracement and 1, okay. It is very possible into the options expiration, futures options expiration date, which is January 27th, which is Tuesday, and ahead of the FOMC, because everybody is now losing confidence in even the validity of the Fed's existence at this point, that and at a very minimum that we should be able to hit 105, which is kind of where we are. Okay, we finished from 101 to 103 into the close. And that it is very possible for us to gap up into this 112. And once we get up about, like I said, $100 price mark, this thing can run because the lid has been blown off. We still haven't seen this violent eruption of prices. What we've been seeing is, very, very controlled and systematic, which is healthy. You go up, you little pullback, and there's some slam crew actions, and then it just recovers immediately, and it goes up, hits a new all-time highs, pulls back, and consolidates, in like a day or two, and then it moves higher. And that's what's been happening. For us to clear into this 112 and maximally into this near this 150 area is very possible towards the end of this month. Okay, so you saw this here first from me. All right, so now let me bring this up, and then let's go over some of the other charts. Okay, here's the put to call ratio on the SPX, and I said that we will probably likely just bounce up and either test this area, maybe even go up to here. I just think that we are now at a level where there's so many divergences on this McClellan summation index that we are going to start coming down and coming down hard. And this is all these divergences are now being shown in this McClellan summation index. Okay. Now let's look at the flip side, not the USD JPY, but JPY to US dollars. As the US dollar, as I showed you, is plummeting, Japan JPY is now basically above the 80 MA. It's going to start targeting this 20 SMA. That little blip up is going to cause major chaos, and I don't think they're going to stop until we get here and then see if at this 200 SMA that it can break out. This is really, if you look, and if for those of you that don't believe me, this is really an inverse head and shoulders, and we're basically above the bottom of this neckline. We're moving higher, folks. Okay, RSI is basically telling us that there is a positive divergence going on. Okay, real quick, I talked about this. Silver is completed, has completed, and maybe starting this phase 4 alpha move. Okay, and everything is moving higher. Okay, this is not a divergence yet, folks. This is just getting started. I think phase 4 is coming. Okay, this is the phase 4. That's where the big price explosions are coming, and I think it comes this week. It starts this week. Okay, we see these divergences. There is no divergence. These are all directional. PPO-ADX is showing us that we're doing this type of an action, right? From here all the way up, we're doing this. If you look at it, we're doing this type of move. That is a pattern that is conducive to further moves higher. Okay, let's look at gold. Okay, wow, geez. Here's gold. Okay, oh, bring it up. Come on. Let me save that change. All right. I think we're beginning to have, here's the phase 1, long phase 1, phase 2, phase 3, and then we're now beginning this phase 4. Okay, was this phase 4 or was this phase 3? Okay, I think this is starting that phase 4 parabolic liftoff. This is the same type of move that I'm expecting to see. There are some divergences that it needs to overcome, but you see this little blip here? Okay, we are getting above this negative divergence, and now the price is going to start following suit. You look at basically this MACD. I mean, it's bullish. It's all bullish, folks. Okay, gold is going to take out 5,000, start running into that 5,500, maybe start running into the 6,000 into February and March, and it's not going to stop because too much money has been printed, too much fraud is in the system. If you don't believe it, then listen to what Trump's administration is talking about, things that are occurring in Somalia and all these misappropriation of your tax dollars. This is what this is all about. But gold now beginning to take off is telling you there's something other ominous things that are brewing, which I do not know yet, but something is planned and nothing is by accident. S&P 500, okay? Negative divergence is galore. Negative divergence, negative divergence, negative divergence, and we're just churning at the top. Those of you that are saying that the stock market's hitting all-time highs, it's not. It has not been doing that. On a weekly basis for the last 5 weeks, it has been churning at the top, you know, just dancing around this green line, which is the 80 MA. Once we break this dotted line down here, and it may happen this week. Maybe it doesn't happen this week, but you got to be on the lookout. You got to know what the markets are telling you. Markets are telling you the market has topped. It is very, very dangerous to be a bull here. PPO-ADX is showing a bearish crush right here. Okay? And more importantly, look at where we are on the accumulation distribution. We are literally at the maximum. Everybody that has bought has bought. We're being held up by literally 7 stocks and the banks that are just being fed printed money. And then, you know, Federal Reserve has the audacity to tell us that they're into maximum employment and 2% inflation. Then stop printing money and stop making banks accountable that are bankrupt. Make them go insolvent. Okay, because if you and I did some stuff like that, what the banks are doing, not only would we be in jail, but you know, we'd be bankrupt at this point, and they are bankrupt, folks. Here's S&P 500 on the daily. Okay, there's some negative divergences that it needs to overcome, but I think we're going to start getting over it. Okay, right? Are we going to get over it? No, we're not. This is the negative divergence. They're going to try to get over it. I misspoke. Here's the head and shoulders that I talked about on the daily. That's forming on the SPY. It's still in development. Okay. All right. All of these volumes, you know, it just basically, you know, we have some heavy duty volume. These buy volumes right here are actually sell volumes. When we get to 80 MA, they sell it off. Okay. They're sucking in the retail bag holders. Don't be a bag holder, folks. Okay. Look at Apple. Look what Apple's telling you. Okay, Apple's negatively divergent. I talked about these exhaustion gaps. We topped here, and we're looking at these. And Apple hasn't even begun to break down. If we lose this pivot here at 142, we're gonna start going into these areas. Okay, looks like a pretty decent short to me. Okay, and Microsoft is the other bellwether. Okay, double top right here. We broke below this neckline. Okay, and then we failed to gain above there. So the next obvious thing is that with all these negative divergence, all these buy volumes that you're talking about are actually insider selling volume. As we get into these inflection points, they're dumping on you the retail. Look at these. Okay, everyone thinks that we're going to bounce from here. It's just showing you that the weakness, yes, and any bounce, this is an opportunity to load up on shorts. Okay, this is what's happening. So that's what's going on in our world right now. So we want to be, as our Black Swan watch continues, we got to watch the USD JPY peg. Japan is now in survival mode, and it's every man for himself, and they are going to be dumping, and they are dumping, because you can see that on the US dollar plummeting, and as well as the 10-year yield rising still, despite intervention. Fed is powerless to do anything. Silver and gold going parabolic. Spike begins this week. Okay, we have seen nothing yet, folks. For those of you that keep saying short the market, sell silver, sell gold, go buy Bitcoin or whatever, and I love Bitcoin, I love XRP. Okay, you should be accumulating those as they are under pressure. Okay, they will be used for the new monetary regime that is coming. Stock market is at extreme risk. Fed FOMC meeting may be the catalyst for everything, as people realize that the Fed is a big giant fraud. Okay, I said it. All right. So we're going to be watching silver, which closed at 103.53 post-market, and it closed above $100. Signals new, more violent move, parabolic move are finally coming. Okay, 105 to 117 by Tuesday, possible. Spike to 135, 150 by month end, which is this Friday. It's theoretically possible, but I have to put it out there, right? Japan and China, coincidence? Maybe dumping all of the U.S. Treasury bonds to save their own market. And to a point where we bought back almost $8 billion of the debt that we issued with printed money. We bought them back because we're pretending that there's demand. Silver slam has largely failed, and most of the slam crew is now largely levered long. And so what do you think these greedy bankers are going to do? They're going to start pushing silver prices higher. Okay, this is a battle, not on derivative end, of diminishing supply from the industrials, from the sovereign banks, from the central banks to the commercial banks, and with the retail people. The Johnny-come-latelys have not woken up yet. They're still in denial, or they're waiting for a price pullback that's not going to come. Okay, the markets are going to stay irrational longer than you can remain solvent, for those of you shorting silver and gold. FOMC 128 2026 at 2 p.m. will reveal that they are obsolete and complete frauds. And, if you just knew the truth about the Federal Reserve Bank and how they came to be. Right now, Andrew Jackson might be smiling in his grave right now, looking down from heaven. Volatility. Hey, do you have VIX? VIX might be the play of the month in February. All right, so thank you for following me. Follow me at Galaxydoc Market on Twitter, and subscribe at youtube.com. And, if you want to work with me, email me at coachbrandon@protonmail.com. If you want to learn about joining my basic essentials community membership, click on the link or the profile, and it'll take you to a site, $49 a month. You get in-depth analysis, guidance from my alerts, and my watch list, more importantly. Okay. Otherwise, let's get some alpha. Thank you so much. Let's rock and roll. Bye-bye.